Okay, we're still working on the textbook that deals with the correcting entries. Here we're back to looking at accrual errors. And if you recall from mastering the adjusting entries, an accrual is an expense that's incurred or revenue that is earned before cash flows. Cash comes after. Accrual, cash is after. So at the end of the period, an adjusting entry is recorded to accrue revenues and receivables and to accrue expenses and payables. The adjusting entry to accrue revenue is some type of receivable is debited and then its related revenue is credited. The adjusting entry to accrue expenses is to debit an expense account and credit a related payable account. So accrual errors fall into three categories. Failure to record the adjusting entry entirely. Secondly, accruing too much. Thirdly, accruing too little. If the error is found before the books are closed for the year, it can be corrected with a simple journal entry. So, review. The adjusting entry to accrue revenue is to debit a receivable and credit a revenue. The error, failure to record the adjusting entry entirely. Well, correction is you go back, you review, you find that you've missed it, and you record it as it should have been initially recorded. Another error, too much revenue was accrued. So you debited receivable for too much and you credited revenue for too much. Well, you need to find out how much. You record an adjusting entry with the accounts reversed. You're debiting revenue, debiting the receivable, and you're doing so by whatever amount that was too much. Too little revenue was accrued. Well, you need to record another adjusting entry, debit the receivable again, credit the revenue by the additional amount that you need. All right, here's an example. Advice Co. is doing a $30,000 consulting job, and it will be paid upon completion. At year end, 30% of the job has been completed. All right, 30% of 30,000. So that would be $9,000 has been completed. So the year-end adjusting entry should be a debit to accounts receivable for $9,000 and recognizing the revenue by crediting consulting revenue for $9,000. Correct the error if Advice Co. failed to record an adjusting entry. Well, if they failed to record the adjusting entry, then none was recorded. We find it before year-end closeout. We go ahead and debit the accounts receivable and credit consulting revenue for that $9,000. Let's say we accrued 40%. That's too much instead of 30%. So 40% of 30,000 would be 12,000, and we really should have recorded 30% of 30,000, 9,000. So we've actually recorded too much. We've debited accounts receivable, credited consulting revenue for $12,000, which is 40% of the $30,000. Well, we find it. Now it's $3,000 too much because it really should be $9,000. So we need to take and reverse the entries, the accounts, debit consulting revenue, credit accounts receivable for what is too much, which is in this case $3,000. Let's say we only accrued 20% instead of the 30% of the $30,000. Well, 20% of $30,000 is $6,000. So recorded was a debit to accounts receivable and a credit to consulting revenue for $6,000. Well, that's too little. We need to have it be $9,000, so we need an additional $3,000. So the correcting journal entry is to debit accounts receivable and credit consulting revenue for the additional $3,000. Let's say that we've got an accrued expense error. The adjusting entry to accrue an expense is to debit the expense and credit the payable. Remember that cash is going to come afterwards. We're going to pay for this accrued expense after the end of the period. Well, the error, failure to record the adjusting entry. Well, very simply, we sort through, we look, we review the entries, we've missed it, we record it as is. Debit, expense, credit, payable. Let's say too much expense was accrued. Well, we need to reverse the account entries, debit payable, credit expense for the excess amount. Too little expense was accrued. Well, we again debit expense, credit payable for the additional amount that we should have recorded in the first place. Here's an example. We have Clark Co. takes the $50,000 loan at an annual interest rate of 12%. Interest is paid twice a year on February the 1st and August the 1st. The last payment was on August 1st this year. Okay, and we're figuring simple interest. Simple interest is to take the principal, the loan amount of $50,000 times the rate of 12% times 1 year, or we have to figure this out on fractional portions of the year. So let's see where we are. They're saying the year-end adjusting journal entry should have been interest expense of $2,500 and interest payable. Why? Because August 1st, we're looking at from August through December 31st, we're August, September, October, November, December. We're talking about 5 months. And 50,000 times 12% times 1/12 is actually $500 interest per month. So 500 times 5 is 2,500. So this is what it should have been. Now, if we fail to record the adjusting journal entry, we simply go back, review, we catch it before year end, and we debit interest expense and credit interest payable for the full 5 months, $2,500 worth of interest. If we accrue 6 months instead of 5, we'll be accruing $3,000. No, because that's 500 times 6. So we've accrued too much. What we need to do as a correcting entry is to remove 1 month. So we debit interest payable, credit interest expense for the 500. We've reversed the accounts to remove that extra 1 month interest. Let's say we accrue 3 months instead of 5. So we're accruing too little now. So we'll be accruing $1,500. That's 500 times 3 months. That's not enough. We need to have 5 months or a total of 2,500. So the correcting entry is to debit interest expense again, credit interest payable, this time for $1,000. So the total interest expense for the period, for the year, is $2,500. Let's look now at deferred expense errors. Keep in mind, deferred expense is a prepaid expense, so it shows up as an asset. Supplies is a prepaid insurance, prepaid taxes, prepaid rent. Those are prepaid expenses, which in fact are assets. Now, so the original entry may have included that asset account, the prepaid expense, and a credit to cash. Or we may have taken the alternative approach where we debited it to its expense account and credited cash. Either way, at year end, we still need to make an adjusting entry to make sure that we have the appropriate amount of expense and the appropriate amount showing as a prepaid expense. All right, the adjusting entry now, we've got, if it was initially set up as a prepaid expense, the adjusting entry would be to debit expense for what has been used and credit prepaid expense. Or if it was set up as an expense already, we need to remove from the expense account by crediting expense the amount that is to carry forward to the next period, the next year. And we would debit prepaid expense for the unused portion. So, review. If the prepayment was recorded as an asset, a prepaid expense, the adjusting entry is the debit to expense, credit to prepaid. Failure to record the adjusting entry, we'll have to go back, review, make sure that we've got everything accounted for, and when we find the missing one, we debit expense and credit prepaid expense. Too much expense was recognized. We're going to have to reverse the accounts that we used and therefore debit prepaid expense and credit expense for the additional dollar amount that we took. If too little expense was recognized, then we're going to once again debit expense, credit prepaid expense for that additional amount that we need. Here's an example. On May 1st, Trucco prepays $2,400 for 2 years insurance and debits prepaid insurance. So $2,400 for 2 years amounts to $1,200 per year. This is on May 1st, though. So we're going to have to look at this based upon what it is on a monthly basis. And if we take $2,400 divided by 24 months, we're looking at $100 per month of insurance cost. All right, so at year end, to go from May 1st through December 31st, when we're looking at a calendar year, May through December would be 8 months. So 8 months times $100 would be $800. So the year-end adjusting journal entry should be a debit to insurance expense and a credit to prepaid insurance. We need to correct the error if Truckco failed to record the adjusting journal entry. If none has been recorded, we simply review, find that we did not record it, and we do what we should have done initially anyway. It's to debit the expense and credit prepaid. If we recognize $500 in insurance expense, then what would initially be recorded is insurance expense for $500, prepaid for $500. That's too little. We need an additional $300, so we'll have to debit expense, credit prepaid insurance for the additional $300. If we recognize too much, say $1,000, that's what would be recorded initially. We're going to have to take and remove the excess by reversing the accounts, debit prepaid $200 to put that back for future use, and credit $200 so that we have insurance expense for the period of $800 as it should be. Now, let's go back through the same scenario, this time if the prepayment was recorded as an expense. So the adjusting entry would be to debit prepaid expense for the unused amount that we'll carry forward, and we'll take it out of expense. Failure to record the adjusting journal entry is to simply record it as a debit to prepaid expense and a credit to expense. Too much expense recognized, too little deferred. The correction is to debit prepaid expense and credit expense for the additional amounts. Too little expense recognized, where we have too much deferred, then we would need to reverse the accounts, debit expense, credit prepaid expense by the additional amount. Here's our example. Zyla's Entertainment prepaid $3,600 for 6 months rent on November 1st and debited rent expense. So $3,600 divided by 6 is $600 per month. All right, we're looking at November 1st, so we're going to have 2 months. And November and December, so 2 times $600 is $1,200. Well, the year end, 600 times, yes, that's right. 600 times 2 is 1,200. Okay, the year end adjusting entry should be, we need to take the $3,600, we need to take it out of the unused amount, so it's $3,600 times minus the $1,200, or $2,400. We need to take and debit prepaid rent for the $2,400 to carry forward, and we credit rent expense to remove it from that account. If we fail to record the adjusting journal entry, we simply record it as it should be. Deferred $3,000 of rent expense. Well, we would have debited prepaid rent for $3,000, credited rent expense, when in fact the correcting journal entry is that we want to have only $2,400, so we need to reverse the accounts, take out $600 out of rent expense, reducing it to $2,400, and the prepaid rent also then changes to where it has $2,400 that is being adjusted out of it. Deferred $1,800 of rent expense. Well, prepaid rent and rent expense only have $1,800. They really need $2,400, so we need to debit prepaid rent and credit rent expense for an additional $600. So, if the advance payment was recorded as a liability, unearned revenue, the adjusting entry is unearned revenue should be debited, revenue should be credited. Failure to record the adjusting entry, we should record it as above. Too much revenue is recognized. Well, we need to reverse the accounts, remove out the excess. Too little, go ahead and debit unearned revenue again, credit revenue for the additional amount that is needed. Let's look at an example. On September 1st, Alarm.co received $480 in advance for 24-month alarm monitoring and credited unearned revenue. If you take 480 divided by 24 months, that's $20 per month. This has initially been set up by crediting unearned revenue, which is a liability account. And the year-end adjusting journal entry would be to debit $80 out of unearned revenue and credit revenue for the amount that we've earned, $80. If we fail to record the adjusting journal entry, then upon review, we'll find it. We'll go ahead and do what we should have done. Debit unearned revenue, credit revenue for $80. Recognize $60 of revenue. Well, we would be debiting unearned revenue for 60, crediting 60 revenue. That's too little. We need an additional 20. So go ahead and use the same accounts, debit unearned revenue, credit revenue, $20. And that will give us the 80 that we want for recognizing revenue. Recognized 120 of revenue, that's too much. So we have too much in revenue. We have too much by way of $40, so we need to reverse the accounts, debit revenue to remove the 40 by debiting, and credit unearned revenue by 40. That way we'll only have the $80 in revenue that we want to recognize.